Hi, I'm Rashmi Chaudhary, and in this video we'll discuss the statement of profit and loss.
Hi, my name is Amit Gupta. I have engineering background and finance is a big mystery for me.
Hi, my name is Shivangi. I'm currently pursuing PGDM from Jaipuria Institute of Management.
When starting a business, a firm is required to abide by the laws in presenting its financial results over a given period. One of the financial statements that any business entity needs to compulsorily prepare is the profit and loss statement. It is also known as the statement of financial performance. Its purpose is to demonstrate the financial success or failure of the company over a specified period of time.
Please tell me what is the difference between a balance sheet and profit and loss account?
Let me clarify. Both balance sheet and profit and loss account are financial statements. Now you will ask me what is meant by financial statements? Let me explain you in detail. Financial statements are a structured representation of the financial position and financial performance of an entity. The objective of financial statements is to provide information about financial position, financial performance, and cash flows of an entity that is useful to a wide range of users in making economic decisions. These statements answer the three basic questions. First, how much profit was generated by the business over a particular period? Second, what are the assets and liabilities of the business at the end of the particular period? Third, what were the sources and uses of cash over a particular period? So, a complete set of financial statement comprises of a balance sheet as at the end of the period, then a statement of profit and loss for the period, further a statement of changes in equity for the period, a statement of cash flows for the period, and notes comprising a summary of significant accounting policies and other explanatory information. Having said this, now let me explain you your specific query, that is, the difference between balance sheet and profit and loss statement. Balance sheet is a financial statement that reports company's assets, liabilities, and equity at a specific point in time. It does not disclose anything about the details of the operations of the business. It is a statement of financial position of the business, whereas the profit and loss account is the statement of financial performance of the business. Both owners and the management are interested in knowing more about the changes in the owner's equity in detail, and to address this information, a detailed statement summarizing the increase and decrease in the owner's equity caused by the revenue and expenses during the accounting period is prepared, which is known as profit and loss statement. Hope the things are clear.
Yes, thank you so much.
Thanks Shivangi for clearing Amit's doubt. Now after hearing to Shivangi, let's see in detail what is a profit and loss statement. It's a statement where all the revenues and expenses of a particular period are put together, categorized, and presented in an orderly fashion. The difference between these two components is either a profit or loss. Profit is a situation where revenues are more than the expenses. Loss is a situation where expenses are more than the revenue. I've used two words in my discussion, revenue and expenses. Revenue means the total amount of money received or to be received by a company for goods or services it provided during a certain time period. And expenses are costs incurred in producing that revenue by a company.
Hey, the word expense is being used. What is the difference between costs and expenses?
You have raised a very valid question. Cost is the amount of resources given up in exchange for some goods or services. One of the classification of the cost that is important for you to understand at present is on the basis of financial accounting. Cost can be classified into capitalized cost, product cost, and period cost. The capitalized costs are unexpired costs or deferred costs, which provide benefits in the future period and known as assets and hence appear on the balance sheet. The product costs are inventoriable costs or manufacturing costs. These costs are capitalized as assets, that is, in the name of inventory until they are sold, and when sold, they are transferred to cost of goods sold in the profit and loss statement. Period costs have no future value and are expensed as incurred. When these deferred costs are used up to the extent used, they become expense and appear on the profit and loss statement. Amit, let me give you an example to further clarify the various type of costs. Ajay Singh purchased merchandise worth rupees 2 lakh during the year 2016-17. He sold rupees 1 lakh 50% worth of goods at rupees 1 lakh 50,000 and the rest of goods of worth rupees 1 lakh 50% remaining was stored in the warehouse for future business activities. The warehouse rent was rupees 40,000. Now he sold good worth rupees 1 lakh, which is our COGS, to earn a profit of rupees 50,000. Therefore, 1 lakh is our expired cost. He has used that product for business activity. Further, he also paid rent of rupees 40,000 for storing the rest of good. This is period cost as he is using rupees 40,000 for business activity in the current accounting year. The leftover goods of worth rupees 1 lakh lies inventory. Hence, it is unexpired cost. This cost will be shown in balance sheet as inventory.
Amit really raised a very valid question and it was well answered by Shivangi. Thank you.